You're tuned in to Agriculture Today, and we start our Wednesday show hearing from K-State and Washburn law professor Roger McEowen. Roger, thanks for joining us today.
Well, it's good to be with you, Shelby.
Roger, today wanting to talk about legislation which is called the One Big Beautiful Bill, and what is that?
Well, that actually is the name of the bill. That's the official title of this bill, and it's 389 pages of primarily tax legislation that's going to get wrapped into the big budget reconciliation bill that the intent by the Congress is to get this to the president's desk for signature on the 4th of July.
And what's a really big portion of that bill, or something that you find really important?
Well, it permanently extends existing and current tax law, the Tax Cuts and Jobs Act of 2017, the Trump tax cuts of Trump 1. And so it would make the current law permanent, which is absolutely critical. That will avoid a massive tax hike, probably the largest in U.S. history, on all income taxpayers, particularly those in the middle to lower income brackets for individuals and families. Because, for example, without an extension of current law or making it permanent, those that are presently in the 12% income bracket, basically from, we could think of it $25,000 to $95,000 a year on a married filing joint return, they would face a 25% tax rate increase because their rate would go from 12 to 15% next year. Plus, the standard deduction would get cut in half. And if they had qualified children, they're going to lose half of the child tax credit per child. So that would be a massive tax increase, particularly for the lower end. Now, everybody's going to get a bracket adjustment. There's little slivers here and there, but it's pretty safe to say just about everybody's going to get a significant tax increase. But it's particularly high on the lower income levels. And
when was the Tax Cuts and Jobs Act supposed to sunset?
At the end of this year. So Congress is on the clock. They've got to get this work done. And I'm glad they're working on it now because, Shelby, what we've had to deal with in past years is a reconciliation bill that's not passed until just days before Christmas. And, of course, when they're doing tax policy, we can't tell clients, we can't tell farmers and ranchers what they need to be doing to plan for the future because we don't know what the future law is going to be because Congress hasn't told us. And they've even done it a couple of times where they didn't get the work done in the current tax year, and it's lopped over into January where they're setting policy for the prior tax year. And it just creates a nightmare from a planning standpoint, plus administratively for the IRS. The IRS has to adjust all their forms, or many of their forms, and their procedures, and you just can't turn on a dime like that. So in the past, it's caused delays in the tax filing season and problems logistically. So I'm encouraged that we're talking about this in May instead of November or December.
And we've talked about the Tax Cuts and Jobs Act a few times here on Agriculture Today, and why is this something we also care about for farmers and ranchers?
Well, I think the big four, as I call it, in this bill for farmers and ranchers would be the permanency of the qualified business income deduction. And now that's under current law, it's a 20% deduction off of your business income. So, for example, if I'm in a 24% tax rate on my business income, I take a 20% deduction off of that. So it makes my effective rate slightly under 20%. Now, that would be adjusted. Not only would it be made permanent, but it would be changed to 23%, and then there would be a reworked formula that would apply to some service businesses. So not farm and ranch businesses, but service businesses there. But retaining this and then increasing it to 23%, I think is a major provision for agriculture, plus reinstating first-year bonus depreciation to 100% retroactive back to the beginning of this year, and then increasing the Section 179 depreciation amount. That's a big one. And then another one that's important to agriculture is they retain Section 45Z. Now, that's one of the energy credits. That's a clean fuel production credit. They eliminated a number of the credits that were contained in the Inflation Reduction Act of 22, deemed to be wasteful and potentially fraudulent, and they're probably correct on that. But we're fortunate in agriculture that they retained 45Z and retooled it, I think, to make it workable. It really wasn't workable in its current form. They've retooled that and then said that the only fuel that will qualify for this credit has to come exclusively from domestically produced feedstocks. So that's the big boon right there to the ethanol industry. So those four things, I think, are the major provisions in here for agriculture.
Are there some things that have kind of held up this bill moving through?
Well, it had a little bump in the road last week, and it did get out of the House Ways and Means Committee, but it failed on its first vote in the Budget Committee in the House, and that was on Friday, the 16th of May. There was a new vote on that over the weekend, late on a Sunday night / early Monday morning, the 18th and 19th, and it actually made it out of the Budget Committee by one vote, with several people voting present to allow it to clear the Budget Committee, which means it now goes on to the House Rules Committee, where they set the rules for debate on the full House floor, and then it'll go to the House floor. And the plan is to have it clear the House before Memorial Day and then on to the Senate for the month of June.
When you look at this, what have been some what you refer to as sticking points in your blog articles for the One Big Beautiful Bill?
Well, there's a couple of them. One is the SALT deduction, the state and local tax deduction, and that is capped at $10,000 right now, and this bill would move it to $30,000. But there are a number of representatives in the House that would like to see that either uncapped or at least up to $80,000. So we'll see what happens with respect to that. Now, I don't expect any Democrat to vote for this bill, period. That's not going to happen. And so I think the Republicans realize that. And why this is an important provision here is that there are some Republican districts in high state tax states that have high income taxes, where this deduction is very, very important. And so they're going to push for a higher deduction than $30,000. The Democrats want it to go away. They're going to have to find a compromise on that provision. So that's one of the sticking points. Another sticking point, as I see it, has to do with Medicaid and the work requirements for Medicaid. The argument here, and I don't think there's disagreement on this point, both sides of the aisle agree that if you're, for example, a 30-year-old able-bodied male, you should not be collecting Medicaid. Now, the problem with that, they all agree on that, and what the bill does is say, okay, we're going to put work requirements in, but we're going to delay it for a few years. Now, some of the budget hawks don't like that because they want the changes made now. The problem that you've got logistically on this is some of the states have to retool their work requirements because Medicaid is a state-federal combined cooperative program, and that's going to take some time to work out. They're going to have to overcome that hurdle. And then there's going to be some budgetary issues, too. But we'll see. But there's a little bit more room on the budgetary issues in the Senate than there is in the House. And once it's gotten past the House, I think that point becomes easier in the Senate.
Roger, you mentioned budget hawks, and what are those?
Well, budget hawks are those that don't like to increase the budget deficit. And so they are really concerned about cutting wasteful programs or what are deemed to be wasteful programs. But again, this is what DOGE has been all about. But the problem we've seen so far is the Congress has not been able to codify any of the DOGE cuts. So this is going to continue to be an interesting problem politically as this bill works its way through. It is scored as costing $3 to $4 trillion over 10 years. Now, the OMB, which does the scoring, totally got the Tax Cuts and Jobs Act effect on the fiscal treasury wrong. Revenues actually went up under TCJA, not down. The problem has been on the spending side. The Congress has outspent the increase in the revenues, which has increased the deficit. So that's going to be an interesting debate as to see how much strength these fiscal hawks have and how much they squawk about this on the House side this week and then later on in the Senate side.
Roger, from your perspective as someone who works with agricultural taxation and law, how do you feel like it's going to go through the rest of the votes it has to?
I think it'll clear the House. I think they'll get it through and get it done by Memorial Day. And then the Senate will pass its version. And then the question is going to come in when they try to reconcile the two versions. That's where it really gets down to brass tacks. So about mid-June, this is going to be the heat of the battle, so to speak, on trying to get a final version that can go to the president. But as I'm looking at it right now, since it came through the Budget Committee, I think it shouldn't have too much problem getting through the House. I think I know the margin is short. I don't expect any Democrats to vote for it. Now, the Republicans can only lose, I think it's 2 votes and still get it through. I think they get it done, and then the question is, what's going to happen on the Senate side of things, and can they reconcile the two bills and get it to the president by July 4.
Is this something we're probably going to hear more about from you then?
Definitely. This is going to consume quite a bit of the discussion over the next 6 weeks.
Where will people be able to find that discussion?
Well, I already have two separate blog articles up on this, one that was posted on May 13, another one that was posted on May 18, and I'll try to keep readers updated as we go through the process.
Roger, I appreciate you taking the time to join us today.
Thank you, Shelby.
That was K-State and Washburn law professor Roger McEowen. I will link his blog articles where he talks about this topic in today's show notes on agtoday.net. You can also find them by going to agmanager.info.